Okay, good afternoon, everyone. Thank you so much for taking the time, especially in the middle of a work week on a Wednesday afternoon. Most important, and this was kind of a last-minute urgent webinar. We wanted to put out the invitation to all life and annuity Levinson agents. Even if you've never written an annuity before, you're a veteran, this has to do with everybody. So we tried to express how important this is in the invitations that went out. It's literally crucial if you're going to be in the annuity space in 2022, and I believe into the future as well. So what we wanted to do, we have 3 in-house annuity reps at Levinson under one roof here in South Florida, which is Bennett, Ashley, and Josh. As you know, with a combined, 70 plus years of experience just in the annuity world. So that's huge for you all. But for something like this, and we also host our quarterly update annuity calls, we bring in a third-party consultant, Christopher, who's a professional in this space. And the reason why I love to bring in Chris for these special urgent calls is because he's not tied to one company. Let's face it, we all have heard from the carrier VP and, yes, they'll talk about, let's say, the DOL ruling, and then you kind of get that 1-2 punch, and then it rolls into why their product is the best and their company has the best financials, which is wonderful. But I like to hear from more of a consultant because he doesn't have a vested interest in one particular product or carrier. So it doesn't get any more real and authentic than hearing it from Chris, and that's why we're delighted to have him speak to you all today about this very important change in the annuity space. And then I also asked him to handpick his favorite, hottest products for the new year. So he's going to talk about that quickly as well. And we're going to be very, very close to our 30 minutes that we've been marketing in those email blasts to you all. So I promise you that this will not be an hour. Okay, so without further ado, let's jump right in. I don't want to waste a minute of time. So these are the Levinson go-to carriers, okay? Very, very important. Most of these are direct with us in the carrier, okay? That means there's not 22 different hands in the pot taking your commissions. And most important, service, right? If you need to help a client or there's a question, basically it's us and the company, and you have everything that you need at your fingertips. And then, of course, like I said earlier, use Ashley, Bennett, Josh as your go-tos and resource for annuities here at Levinson. So all of those companies listed in front of you are also available on our Annuity Experience dashboard. So if you, for example, want to see any product brochures, you want to check commissions, you want to see what marketing brochures are available to blast out through Constant Contact or Agency Automator, we have videos, templates, we have a huge marketing library that you can choose from, and all of it is 100% compliant. We have a rate sheet, of course. We have the scholarship program with about a quarter of these companies. It's already approved, so that's another big plus. We have a quoting tool, of course, lead programs just in the annuity space, which is a big deal. So everything you need to be dangerous to sell annuities in 2022 is on the Levinson site, okay? And just so you know, we kind of dipped our toe in the water about 7-8 years ago. And today, and this is just crazy to even speak about this, but if you think about Levinson on the life insurance side, right, since 1972, over 21,000 active agents, right, today. Think about this for a second. We started this annuity division almost 8 years ago. And as far as weighted premium, okay, if you compare life versus annuity, we're almost at the 50-50 line based on 2021 numbers, which is amazing, okay? And what does that mean to you all, and what does it mean to me, is we became a huge player in the annuity space in a very short time. So kudos, and my hat goes off to Ashley, Bennett, Josh, and of course our annuity consultant, Chris, who's been a big part of this growth. So thank you to you all. Thank you to all of you agents that have trusted in us here at Levinson, right? And said, I'm going to take the first step. So I love to talk about that. I love to see these numbers increase every year. And again, it's because of you all. Now, if you're already appointed with one of these carriers through another competitor, okay, and you say, hey, I want to move this over to Levinson so I can take advantage of all the marketing and the scholarship program, and no problem, okay? Obviously, you need a release, right, if there's business written. Each company is a little different, but we match or beat your existing grid, plus you get cash or free leads with your first application that goes in force, okay? So it's a win-win-win across the board. You have zero to lose. If you're interested, let me know, and we can discuss that as well. And the next slide is our incentives, right? So, you know, at the end of the day, we know there's thousands of competitors across the country, right? And they're under a GA, who's under an AGA, who's under an MGA, who's under an IMO 4, who's under an IMO 3, right? We know how the game works, okay? But the difference is, and I hope you believe us when we say this, number one, we put most of our overrides back into the marketing platform to help you all sell more product and make more prospects aware of what you do. That's why we can afford to give you Agency Automator and this great website that we have over $1 million invested in. We just built Annuity Agency Automator. The list goes on and on, okay? But it's that simple. It's like Costco versus the neighborhood Publix, right? That's the main difference when it comes to Levinson in the annuity and the life side. Okay, very, very important stuff. On the left side is earn up to $3,250 by selling these carriers with us that are listed on the flyer. I won't get into every single bracket, but we're going to email these out to every one of you as soon as we hang up today. The middle section is our marketing allowance program available to all Levinson active agents. Okay, and yes, you can qualify for that. And here's the best part. We're not talking about $1 million of annuity premium. This starts at $150. Okay, so very achievable, very reasonable. Let's move over to the right side. The Levinson Expo is back April 8th, 2022. I hope you're registered. We have a few annuity carriers that will be here at the Expo presenting. We got a bunch of great hybrids we're going to talk about. It's going to be a day full of sales ideas and networking, a dinner the night before for the out-of-towners, and it's free for all of you. Now, if you want to qualify, right, we have a little incentive here where if you're writing life and annuity, we weigh out the annuity side, okay, and the life side is obviously the target paid premium. But, I mean, just look at the tiers here. Number one, $500,000 is one free night at our beachfront location. $1 million is round trip airfare from anywhere in the country. And then $1.5 million is the round trip airfare plus an entire weekend stay at our beachfront resort, literally on the sand. You can walk out the back porch and your feet is touching the white sand of South Florida. So this is going to be an unbelievable day, a great weekend, and I hope you join. Even if you've never written before, again, it's free. Make sure you register now. We'll send out everything once again in today's thank you email. Okay, just because of the time limitation here, I want to introduce our expert annuity consultant. I don't say that lightly. Christopher is joining us now, and he's going to jump right in, take out a pen and paper, jot down all notes, and use that Q&A box right-hand side. Chris, you there, buddy?
I'm here. Can you guys hear me?
Yep, loud and clear.
All right, beautiful, beautiful. Well, thank you guys so much for having me here. You know, I always appreciate doing these with Levinson and Associates. You have such a good team behind you when you're working with these folks. And, you know, we really felt an urgency to talk as quickly as possible about this DOL ruling, among other things, too. You know, it's the beginning of the year. It's a great time to get hot with some of these annuity sales. It's a great time to add these to your conversations if you're not already. And especially with all these incentives and different ideas that Bill has in place for you, folks, you got a lot of time here this year to get cracking on annuities. So I want to dive right in, though, because I was brought on here because I want to talk about a few things. I want to talk about this DOL rule. I want to talk about the best interest rule. A lot of hubbub has been made about this thing, and it's actually very, very easy to comply. We just want to make sure that you do. That is the key here. We're going to talk a bit about the DOL rule and NAIC. We're going to talk about the current market, the current annuity market, and yes, some different products and ideas to drive your sales. Folks, with that being said, let's start off with this fiduciary rule. And I just want to be clear about what this presentation is going to be, because I have sat on a lot of presentations with carriers. I've sat on presentations by regulatory agencies. I've sat on 40-minute presentations, hour-and-a-half long presentations. This is going to be condensed down to about 15 to 20 minutes. So I am not here to tell you every single detail about the DOL rule run into its history from the 1970s until today and how we ultimately came to this decision. I'm more concerned about how you can comply with all your sales starting from, well, we're going to retroactively go back to January 31st and moving into the future. So that's what we're focusing on. There are a couple of handouts on this webinar. And before I dive right in, just grab those handouts, open them up, take a look at them when you get some free time. That one piece from North American is an outstanding one. That piece really goes into detail about what this rule is. And the reason I included that is because that is a piece for you to say, oh, I want to know all the nuts and bolts and what this rule is all about. There's about a 12-page PDF for you to best understand the rule. Or you can listen to me here on this thing, and I just want to give you guys the nuts and bolts and how you can comply today. With that said, let's just talk about what is the fiduciary rule. And I'm just going to read this like a bad professor. The DOL's definition of fiduciary demands that retirement advisors act in the best interest of their clients, put their clients' interests above their own. Okay, have to put the client's interests above their own. They don't want conflicts of interest when working with these folks. So if you as an agent or advisor are deemed a fiduciary for the transaction, then the DOL prohibits you from receiving compensation for advice as it relates to qualified assets. So this rule only affects qualified money, the qualified dollars that you're moving into annuities. That's what this rule affects. Okay. Now it says you're prohibited from receiving compensation unless you qualify for an applicable prohibited transaction exemption. Again, this only applies to qualified assets. And I will tell you, folks, I put a bullet point down here. If you're affiliated with a broker-dealer, these rules could be a little different for you. The forms that you fill out, there may be additional forms or maybe different forms. If you're on this call and you work with a broker-dealer, I highly recommend you see what their rules are, just to be certain. So what are some real-world uses of the DOL? And folks, if you're doing annuity sales now, you've done these things before. Rolling over money that's qualified to a fixed or fixed index annuity. That's going to trigger you to have to use the PTE 8424 form. If you do an annual review of fixed or fixed index annuities, you're creating an ongoing relationship with the client. I know we have a lot of good agents on this call. I see how many have shuffled into this thing. Hopefully you're doing your annual reviews. Just that alone makes you a fiduciary here. You need to complete this PTE 8424 form. How about life insurance premiums paid from R&Ds? This one's going to sneak up on some folks. They're going to think they're just doing life insurance. Well, if you're using R&Ds to pay that life insurance premium, those required minimum distributions from qualified accounts, that triggers you as a fiduciary as well. So this slide is primarily here to show you some real world uses and when this is going to affect you. That's just 3 examples, but I think some very common ones. So am I fiduciary? Take the 5-part test. Again, this webinar, I'm not diving into huge detail about every piece of the DOL rule. That's what that handout is for. But this is the 5-part test to determine if you are a fiduciary. Okay, you're going to see this everywhere. You may have seen this already in emails from different carriers or different organizations. If you follow NAIC, if you follow FACC, some of these other regulatory groups from the insurance industry, you've probably seen this 5-part test already. Like I said, let's hit the nuts and bolts here. What's going to qualify you as a fiduciary? If you provide best interest advice on qualified money, that is individualized to the needs of the consumer, you intend to create an ongoing relationship with the consumer, and provide your advice for a fee or other compensation like commissions from annuities. well, then you meet the test and you must take additional steps for compliance. Folks, I'm going to mention this a few times. If you're dealing with qualified money, take the PTE 8424 form. If you're dealing with qualified money that you're rolling into an annuity, complete the necessary steps. I'm going to show you how to do that here, okay? I am absolutely going to show you how to do that here because I've been on a lot of webinars. Like I said, I've been on a lot of trainings. I've even done competitive IMOs to Levinson and listened to their presentations. And a lot of them are trying to find ways around the DOL rule. Some folks think if you're doing a MIGA, like a multi-year guarantee, you're not necessarily having an ongoing relationship with the customer because there's no annual statement, like with a fixed index annuity. But what if that client calls you about life insurance, or that client calls you to manage something else for them outside of annuities? That creates an ongoing relationship. You're best just completing the PTE 8424 form that I'm about to show you. So with that, prohibited transaction exemption 8424, it's a big fancy word for this form that you must take. And with this form, you have to disclose to your clients three things. There are disclosure rules and there are non-disclosure rules. This is what you must disclose to your client. These three things: your relationship as an agent to the insurance company, your sales commission, you have to show that exact number, and a description of charges, fees, discounts, penalties, adjustments under the recommended contract. Okay? Those three things: your relationship as an agent to that company, your sales commission, and a description of charges, fees, discounts, penalties, or adjustments. There are some non-disclosure requirements, and that means just some things that you absolutely have to do that aren't necessarily in writing to the client. Okay? Let's cover some of the important ones here. No more than reasonable compensation paid. That's one of them. Record keeping requirement. This is the big one that's going to catch a lot of folks. You have to keep your PTE 8424 form and anything shown to the client at the presentation during sale in your records, either electronically or hard copies, for 6 years. 6 years, okay? You have to keep all files that were presented to the client, any other products shown, the products sold, obviously, the PTE 8424 form, and keep those in your records electronically or hard copies for 6 years. Arm's length transaction, you and client are required to be on equal footing, have no shared financial interest in the transaction. Okay, the big one there, though, will be that record keeping requirement. Keep that in mind, folks. So what does that PTE 8424 form look like? Take a look at the one on the left. That's the one that I have attached for you, folks. That's the one that you're going to use. Okay? The important thing to know is that you can use that PTE 8424 form on the left-hand side here with any carrier. It's universal. The company doesn't even want it, folks. I'm going to go into that here in just a moment. This is for your record keeping and for you to leave with the client a copy as well. Now, you will see some companies like the one on the right there, that's Guggenheim, for example, they put their name on theirs. Now, that's their PTE 8424 form. I just wanted to show that for a specific reason. You're going to see some companies do that. It doesn't mean you have to use Guggenheim's if you sold a Guggenheim policy. They just have it branded that way. You can use that form on the left, the one in your handouts, for any qualified money sales moving forward. You can see the section at the top where you put who you are, your relationship as the agent to the insurance company, where you put down your commissions, a quick description of charges in the annuity, and then signatures. Really pretty simple, but something that you must do. Because the DOL is going to start enforcement on this. That's what that means. Anytime after February 1st, you're going to get, you could have the DOL come after you. You could have this regulatory agency coming after you if these things aren't completed. Where that can happen is if a client files a complaint and they look and they see that this is qualified money and they say, okay, well, Joe agent had a complaint. This isn't really what the client wanted, and this was on qualified money. Let's make an example out of Joe agent. You don't want to be that person. Have this information in your documentation. Let me give a quick word about the NAIC model regulation for suitability in annuity transactions. Folks, you may be familiar, and I know a lot of you are in Florida, but a lot of you, there's a lot of folks on this call. So I'm sure there are folks all across the country. If you're in one of the states on the left-hand side, you have to complete a best interest training through the NAIC. And I wanted to talk about this because the NAIC and the DOL are two completely different organizations. And it's a little bit conflicting what they're doing. And actually, if you Google NAIC and DOL, you're going to see they're kind of butting heads a little bit on whose rule should be the primary rule in this country. And the reason is the NAIC best interest training, that's a training that you have to take online. It's 1 to 4 hours, depending on what state you're in and the timing of when you're taking it. Normally, it's going to be a 4-hour course. And it's all about best interests and how to be in the best interest of your clients. And the NAIC says you don't have to disclose the exact commission to your client. You just have to explain to your client that you're getting a commission. Of course, the DOL wants you to detail the exact commission you're getting. So as you can see, there's some conflicting information right there, but I will tell you this. If you're living in one of the states on the left-hand side and soon on the right-hand side, you have to take that NAIC best interest training. Even though the DOL rules here now, still take that training this year if you're planning to make annuity sales. Okay, if anything happens, if the rules canceled, thrown away, something like that, at least you have this done. Make sure you have that training completed. Now, what that will do, if you don't have the NAIC best interest training completed and you're in one of these states on the left-hand side, you're going to get a NIGO on your application. You probably have to retake a whole lap. Don't do that. Get that training done. I know Bill and Ashley and Josh can help you out with anything that you need here. Important to know, folks, okay, we're just going to kind of wrap up the DOL conversation with this. This is up to you, okay? This is the important part. This is really up to you. And the reason I say that is because most annuity applications won't have a PTE 8424 form in them. It's up to you to have that form when you do qualified sales. Carriers don't want your 8424 form. That could vary. You may have some carriers that want to see it, but for the most part, I haven't seen a single one asking for your 8424 form. What that means is it's up to you. If you're doing a qualified sale, take that form, get it signed, get another copy signed. You keep one, give one to your client to keep. Okay? Keep documentation of every sale with qualified money. Keep all copies on hand from the sale for at least 6 years. Grab those documents and handouts that I just gave you. And again, I mentioned this earlier, if you're securities licensed, if you do sell through a broker-dealer, there may be additional rules that apply to you as well. Here's some tips on what I would do. Keep documentation of every sale with qualified money. Now, I mean keep all documentation. If you showed 3 different products, put the details of every product in a folder, whether online or a physical folder. Okay? Here's a little tip. Keep the product disclosure of the annuity sold in your records. If you know, every application, paper application for an annuity has a product disclosure. That product disclosure has every detail about the annuity. They can be 10 to 12 pages long. I'm sure you guys have seen these. Now, that's important because those detail all the features of the annuity, the surrender charges, features the fees, if any, income rider details, income rider fees, strategy fees. If you put a strategy fee index in there, it has all the details and the client has to sign it. If it were me, I would keep a copy of that signed disclosure in my records to show that the client acknowledged they knew what they were purchasing, fees and rates and all that good stuff were disclosed to the client. And really keep a record of all products shown. Even if it's just a spreadsheet or the disclosures of the product that you also shown that weren't exactly sold, I would keep records of all those things. Okay, folks. So once again, I would hang on to all of that information. I would keep that in your records. I would grab these handouts that I have. And if you want a more detailed look at what the DOL rule is and everything, please take some time to look at that North American piece. You know, that piece was looked over by lawyers. They have a lot of resources there at North American. That is a very good piece for you to look over if you want to know all the nuts and bolts about this rule. Perfect. So that's the DOL rule. Hopefully you have some questions. Before I move ahead here, I was going to go into the annuity market a bit and some products and ideas. Bill, were there any questions that you want me to answer about that DOL rule, the NAIC best interest rule?
Yeah, actually, Chris, we got a bunch that came in, but what we're going to do, because I did I told everyone we're going to keep this about 30 minutes, so let's just keep moving forward. And then what I'm going to do is answer every single person as soon as we hang up the call. So we'll get to each and every one of you, but keep asking those questions and comments. We want to hear from you. Okay? Sorry about that, Chris.
Beautiful. Not a problem at all. Folks, any questions, definitely get back to them, even about this piece we're going to go into right now. So I want to jump into some ideas for you, but I also want to look ahead in the annuity market for this year. You know, we're looking at interest rate increases happening. And folks, we're in the right business for this. Life and annuity insurers watch for interest rate hike sunshine. I mean, the annuity market is going to be a great place to be when interest rates go up. And we all know that when interest rates go up, markets tend to go down, and we're protecting people's money. With your life license that you have, your life insurance license, you can sell annuities. You have a license to not lose people money, okay? You have a license to not lose people's money because of the capital preservation benefits of annuities. So annuities, life insurance, they are going to be great benefactors in interest rate hikes, okay? You're going to see that happening very soon. So a little bit of good news here to start everything off. One thing I haven't done with you folks, if you've done these webinars before, I've been on here a few times with Levinson and Associates. Let's talk about some industry trends because we don't really cover this that often. This is kind of a new thing. Accumulation, protection, and income. These numbers are in the billions. And you can see there's some asterisks there by those terms. But this gives you kind of a breakdown of how these products are selling in the annuity space, right? You can see those accumulation products have no income rider on them. Protection products, those include multi-year guarantees, as well as other index annuities that don't have income riders on them. And then you have income products. That includes income annuities, products with income riders on them, so on and so forth. And you can see in 2020, you had a big focus on those protection products, right? Those numbers continue to increase. While those income numbers, they went down a little bit. And if you think about in 2020, what people were worried about, what people saw, a lot of folks, they were nervous. They saw the market dropping from COVID, coronavirus coming into play. They wanted to protect their money and get guaranteed rates. And I think that's why you see that number increasing when other numbers are staying somewhat flat or even decreasing like that income number there. Here's another interesting statistic because I actually sat in a webinar with a regulatory agency and pulled some of these numbers. A lot of folks think, look, my clients don't have enough money to buy annuities. That's simply not true. And this is shown right here. Look at this first bullet point. Most advisors consider wealthier clients to be less appropriate for annuities than clients with lower wealth levels. Among advisors serving middle and mass affluent market segments, nearly half feel annuities are most appropriate for these clients. And check out this last one. Households with less than $500,000 in investable assets make up 60% of annuity owners. I thought that was very interesting. Households with $1 million or more represented 20% of owners. 20% of owners. So folks, that's huge. You know, you may think, well, my client doesn't have money to throw into an annuity. They just don't have that type of money. Those are the clients where these products fit perfectly. Clients with less than $500,000 in investable assets made up 60% of annuity owners. So let's get that negative thought out of our heads here for 2022 and move forward talking to every single client you have about fixed annuities. Another quick one here, because I thought, again, this is just some great information for you. Here's an idea and a breakdown of different annuity products and how they sell in conjunction with each other. I think this number right here is really impressive in the middle. Percent of sales from qualified money. Percent of sales from qualified money. If you're wondering how much or how impactful the DOL rule will be, look at that. Index annuities, 66% of sales came from qualified money. Fixed annuities, 44% from qualified money. Multi-year guarantees, 33%. I love these numbers. I know we have a mix of people here, so you have variable numbers in there as well. We're really just talking about fixed in this presentation, but you have variable numbers in there as well. Look at that average premium size, folks. Those are great sales. Think about your commission numbers. What commission level are you on? What's a 10-year fixed index annuity pay you? And what's the average size sale? 139,000? That's terrific. And then look at the average age of product buyer. You'll see with multi-year guarantees, it's an older client. You'll see with index annuities, slightly younger, but you're typically dealing in that 55 to 70 range. That number has not changed. I thought some really nice, interesting facts right there. So folks, products and ideas to drive your sales here. So I just want to give a few ideas on some neat stuff that's going on, new things that are happening in the marketplace, things to drive you for 2022. We have some great MIGA rates, 3% available for 5 years at a lot of carriers. I just said life insurance carriers, annuity carriers, they're looking forward to increasing interest rates, right? That's going to benefit clients. That's going to be an easier conversation for you. And right now, you're seeing a lot of rate increases at the beginning of February. Here's multiple carriers with 3% or higher for 5-year multi-year guarantees. Walk into a home with a client with $100,000 sitting in a CD getting 1%. Flip it into this annuity. Such an easy sale for you. So some good stuff right there. Ocean View Life is an A- rated carrier. They just put a high band requirement on there. So if those of you are familiar with Ocean View Life, if you want that 3% for 5 years, you have to have 80,000 or more. That's a new thing they just added on February 1st. Let's talk about SILAC annuities. I know here the folks at Levinson, you guys are just killing it with SILAC. This company has been great. What I like about them, the products are so client and agent friendly. They really are. You have premium bonus products, 5, 7, 10% premium bonuses available. You can leave off the premium bonus and get higher rates out there. Just some really nice stuff. And I love that you have FIAs that can issue up to age 90 as well. I mean, that is such a big benefit. It makes everyone out there available for fixed index annuities. And on top of that, folks, what a great wealth transfer tool you have with annuities when you could write somebody up to age 90. There's a new product called the SILAC Vega. And I talked about this a little bit the last time I did a presentation for you folks. But this is one I just really want to hit on because this is an income product where if you're familiar with the Allianz 222, it's got a lot of features to battle head-to-head with that product. This one has a 300% benefit multiplier. I'm going to show you an example of what that looks like. But this is a product built for income. It has a 10-year waiting period, and the income numbers that it shows are just fantastic. The features that it has are very impressive as well. So you can get up to a 25% benefit-based bonus, or you can take the 300% benefit multiplier, which I really like. You have options for increasing income, accelerated income. I'll show you all of that here in just a moment. And then you have wellness withdrawals in case your client needs some type of LTC feature. That's available on this product as well. Let's talk about this. 5 benefits with the Vega. Increasing withdrawals, level withdrawals, wellness withdrawals, accelerated withdrawals, which are a first of its kind with this product. I thought it was really unique. I'll show you what that looks like. And an enhanced death benefit. Basically, every feature most carriers have in multiple products, they've packed into this one product. The only change up is that you have to wait 10 years before turning on income. Folks, there are multiple states where this product is and is not available. Take a look here. It is available in Florida. So just wanted to be sure to point that out for you real quick. Let's take a look here at the increasing withdrawals because I want you to see how this works. If you look at this chart, I'm going to pull out a spotlight. You have an increasing column, a level column, and an accelerated column. Okay? If your client chooses the increasing payout, look at how this income increases. We have a 60-year-old who just put $100,000 in here. You can see by year 10, you've got $489,000 in there. And you can see what that income starts off at, $25,160. And look how it grows every single year. You have the level lifetime benefit. Really impressive income as well, $24,489. That never changes. That's guaranteed to never change. And then you have the accelerated benefit as well. Folks, this is a unique feature. It's the only product with an accelerated income feature, which I think could come in handy under certain circumstances. Notice what that income is here, about $49,000, and it goes for 10 years. Where this could benefit you, let's say you have a client and maybe they've gotten a terminal illness diagnosis. Maybe their health has just gone under and they have a limited time to be here on earth with us. Well, that might be a time to turn on the accelerated benefit. Get that money over 10 years. I think there's a lot of reasons why someone might want this accelerated feature. Maybe they just want that income over the 10 years as quickly as possible. I think personally, I love that increasing lifetime feature, but I think the accelerated feature has some pretty awesome benefits to it as well. And again, they get to choose any one of these features, increasing income, level, or accelerated. So again, just showing these numbers here. Look at this increasing income. We started off at $25,160, and it is just growing, growing, growing. By the time the client's 90, look at that, $198,490. Folks, this is an impressive income play for your clients with just a 10-year waiting period. This is an impressive income play with that 300% benefit multiplier and the choice of how you can turn on income. Take a look at this. Here's what I mean by a benefit multiplier of 300%. Let's say you have your money in this index here with this company. It's a combination of the Barclays Atlas, the S&P 500, and the Credit Suisse Raven Pack Index. If the index does 5.88%, they triple that amount to 17.22%. How impressive is that? That $100,000 here went up to $489,000 in just 10 years. That is wildly impressive. Even the account value, folks, because remember, this is an income product. You take the income out of the benefit value, the account value the client could walk away from after 10 years, $177,114. It's impressive growth on that side of the house as well. And I did say walk away from, this is a 14-year product in this example, but this is showing through 10 years, okay? So account value at $177,114, benefit value $489,776 because it's got that 300% multiplier. It's tripling what the index actually does to the benefit value. Most recently, 17.22. In its lowest 10-year period, 14.38. In its highest, 19.2. That is very, very impressive. If your client's goal is income and they'd like to have increasing income to fight inflation, we've all seen what inflation has done to us. I've been to the gas pump. It's a nightmare. It's scary. Increasing income, such a great inflation fighter for your clients. And then you get them something with a 300% benefit multiplier as well. Huge benefits here with the Vega. Now, Silac had a huge year, number 4 FIA carrier overall. I actually got word that they are the number 3 overall FIA carrier. They don't have that printed yet, but that's what I'm hearing. They were the 3rd largest FIA carrier in sales last year. Fantastic. So that's an income product. I'm going to quickly jump into these products real fast because I wanted to have a quick moment to talk to you about strategy fee indexes. Folks, we're seeing a lot of strategy fee indexes out there these days. These are those indexes where there are participation rate buy-ups. You might say, hey, Chris, I do fixed index annuities. I'm getting people out of fee-based. I don't want to put them into another fee index or something else that charges them in a fixed annuity. And I completely understand that. But I just want to show a quick example using this North American VersaChoice product in front of you of what that buy-up looks like. What does that buy-up look like? What does that actually get you when your client has a strategy fee? That's all I want to show you right here. Notice, this is their 2-year Fidelity Multifactor Index with no fee on it. Their 2-year index, look at that annual effective rate of 4.99%. 4.99%, no fee. It's not bad growth. And remember, the worst your client can do is 0. That's what the index does. They can't go backwards, right? What if you change that conversation a little bit? And you say to your client, listen, for a 1.5% fee per year, you can get this type of growth, 9.5%. You're getting a much bigger par rate. You're buying up participation rate in that index performance for just 1.5% per year. And folks, over time, it makes up for that 1.5% fee. And also think about it. If there's a negative year in the marketplace, okay, maybe they lose 1.5%, but you're capping their losses, right? The worst they can do is negative 1.5%. The market lost 15% last year, let's just say as an example. Well, the worst your client's going to do, negative 1.5%. It changes the conversation a little bit, but I wanted to show you some numbers to actually back that up. Whether you like fees, you don't like fee indexes, not a problem. You have options all over the place, but I wanted to show you real numbers. This is where you take that 500,000 and you look in year 10, and suddenly that 500,000 is almost $1.1 million after 10 years. You go the other route with no fee, your $500,000 is $813,000. Still pretty good growth. I mean, considering you have absolutely no risk in the no fee, but it's worth having that conversation. And here's the best part. With a product like North American, if your client's not happy with the fee index, they can get out of it. They can move over to a different index if they want to. So this conversation, yeah, it's about North American and the VersaChoice, but really it's about strategy fee indexes, folks. And just to give them a chance to maybe look at something closer with Ashley or Bill and just say, look, show me something with a fee, without the fee, have that conversation with a client. And if the fee charge is 1.5%, that's the worst they can do in a given year. But look at the upside potential. 9.5% is shown in this North American VersaChoice. Very, very good stuff. And we're going to jump into one other one because I know I'm taking my time here, but I wanted to talk about a couple other products that have no fees. These EquiTrust products, folks, are doing a fantastic job. They have an incentive trip this year. Their commissions are in a great spot. Very agent-friendly products that they have. And if you look at this EquiTrust Market 7, I've talked about a 14-year product. I've talked about a 10-year product. I just wanted to talk about a 7-year product real fast. This is such a client-friendly product. 7 years, 10% free withdrawals after 1 year, no fees whatsoever. They don't even have fee options on this Market 7 product. That's why it's become such a big seller for them. And you can see it's got some pretty impressive growth. They have a Barclays 50 index. If I pull the little spotlight over here, you'll see in its best 10-year period did over 8.5%. In its most recent 10-year period, slightly over 7% in a 2-year index with Barclays. And what I like about EquiTrust as well, they just have a lot of options, guys. You have the S&P Mark 5 index with them as well. What's really unique about this one, you can see in its best 10-year period, a little under 7%, most recently 4.6%. We're seeing some outstanding growth with actual figures with this S&P Mark 5 index. EquiTrust also has some excellent monthly cap indexes, different options for you to be able to mix and match. And again, no fees associated with their index in the Market 7 product. Folks, with that, I want to just wrap it up. That was a few products there. I did forget to mention North American has a rate increase taking place next week, Tuesday. So that index that I showed you just a few minutes ago with that North American Versa Choice right here, that par rate is going from 185% to 205%. So if we did this presentation next week, that number is going to look higher than 9.5% as well. So it really creates that opportunity for a conversation for you to look at those strategy fee indexes. Bill, with that being said, I hope I didn't overstay my welcome, but I wanted to get a lot of information out to folks to be able to kick off this new year.
You know, Chris, you way overstayed your welcome, but it was worth every minute, my friend. Great information. Plus, I'm playing with you. That was awesome. That's why I didn't step up and interrupt you. That was great. We have a record number of agents on, so I just wanted to make sure that everyone walked away with your nuggets. We're going to answer every single question that came in as soon as we finish, and then we'll send out a thank you email to every single participant. We're also going to e-blast this out to all the agents that missed it, unfortunately, but it's okay because we'll have a copy in your inbox. Let's go to the next slide real quick. We're done in 2 minutes, and then we'll let everyone go. Chris, thank you again, as always, and we'll speak again for the first quarter overview. So that will be in the next about 4 to 6 weeks or so. Okay, so this is the Annuity Experience on our site. You can visit here anytime for any of the products and carriers that we mentioned earlier. Also, those handouts will be located here as well. And then don't forget your marketing templates. You should be blasting out to everyone to create the annuity conversation, right? Even if you never sold an annuity before. Okay. All right. Second to last slide here, the training events that are coming up. We have a big one tomorrow from the top selling IUL product in the industry in 2021. That's going to be a great, great call. Now, what's also neat is this carrier will be at our expo. We're going to go over some new strategies. And then on the bottom, this is probably I will say the best one of the year so far. Joe Ross is back, and he has 3 new strategies and stories to tell that all have to do with IUL sales. And now this is the key. These are all for the monster cases. We're talking 100 grand of target premium and over. Okay, you do not want to miss this 1-hour training call with Joe Ross on the 17th next week. Write that down, 2/17, 3 p.m. Eastern time. You do not want to miss. Plus, we're going to have some good giveaways on that call as well. Okay, last slide. This is our Positive Tuesday quote of the week. And I'll just say, you know, we have the Super Bowl coming up, and it's a great story, right, with these 2 underdog teams. And it just goes to show you at the end of the day, right, if you're new in the annuity space, the life space, and the insurance space in general, it's okay. I feel like if you're willing to put the hard work in, right, 24/7, and you literally get obsessed with this business, right? And you become a Superman or Superwoman, and you're all about helping these families, you're going to make it. Not only are you going to make it, if you can stay persistent and consistent, you're going to crush it. I don't care how much the agent next door knows and how many designations they have, okay? It's all about the personality. It's all about the effort. It's all about the drive. Who's willing to go the extra mile will be rewarded every single time. And the Super Bowl is a perfect example of that. Look at these 2 teams, right? No one would have thought. Anyway, let's go over the quote. Being called the so-called underdog is not necessarily a bad thing. It can bring us amazing drive, motivation, and strength, as this year's Super Bowl proves. Coming from behind is not always a bad thing. With that said, let's have a great Wednesday. We have another webinar tomorrow, Top Selling IUL. I'm really sorry about the time issue, but again, I think this was well worth it. Usually I would jump on and interrupt the speaker, but this time I had to let him go. Great information, plus record number of agents on. Thank you again, everyone. Great selling, and we'll see you tomorrow, 3 p.m. Eastern time.